Well, Tanvir, some analysts aren't ruling that out at this point. Clearly, the momentum is firmly to the downside in oil in Asia, and this is really mirroring what we saw in the United States, with WTI June contracts falling 25%. Brent also getting caught up in the sell-off and falling below $20 a barrel. The main reason that we saw the pullback overnight was financial rather than fundamental. The US oil ETF, the largest of its kind in the world, deciding to cut its entire exposure to the June WTI contract and spread its risk further beyond the curve. So when you have a mass exodus out of that June WTI contract, we saw a significant sell-off in the price. Now that is clearly filtering through to Asia trade, where investors are also picking up on a number of concerns in the market. Clearly not able to escape worries about storage hitting limit up, with Cushing at Oklahoma in the United States reaching pretty much operational capacity in the next few weeks, and still no real clarity on when the global economy is going to reopen again and when we're going to start to see demand for crude oil picking up. There is some optimism to take out of this though. On Friday, we'll see the OPEC cut starting to take effect, and we've already seen major OPEC producers actually deciding to cut production ahead of the commencement of that agreement. And at the same time, we also have analysts at JP Morgan saying that this low price environment and the lack of storage is ultimately going to result in forced production shut-ins, which may lead to a reduction in supply and higher prices in the second half of the year. But Nancy, still no real clarity on what happens next with oil.
Yep.